let's start with the shilling. As I was saying, 15% gain so far. 90.50 is seen as a support level. It's posted a strong comeback. Do you see it breaking 90?
Yes, I do. I think my target's been 88 for some time. The higher interest rate structure is obviously what's supporting the shilling. And I think finally the central bank is feeling the collar of the inflation rate. And we should see a traction up to 88. My issue is really whether the economy can sustain this higher interest rate structure for any long period of time. I don't think so. So I think, we've got this good rally going. Once we get around to the 88 level, then we've got to review, look at where interest rates are and for how long the economy can sustain them. The big issue for me remains the oil price. All our exports are unable currently to pay for our fuel bill. And I'm pretty bullish on the price of crude oil. I think it's all about the Iranian geopolitical curve. And I think that trajectory is only going in one direction. So I remain concerned about the fuel price. I'm a little bit more optimistic about food. We've had some good rains, some good short rains. I think we'll see the froth come off the food prices, and that will be supported. But 88 is my objective now.
Yeah, let's move on to the equity market. As I was saying, activity there's petered out somewhat. We've got, only 7 million shares traded yesterday, down from that 50-day moving average of 20 million shares. What are you reading into the activity where we're still seeing foreigners skew to the buy side?
I think, obviously the NSE is down about 24+% year to date. It's within 3% of its 2011 low, which was printed last month. It's hardly running away to the upside. I think it's pretty well supported by foreign investors here who are looking on a macro level. They're supporting the market, looking for the big cap stocks. But until we see some relaxation in the overnight rates, in the interest rate structure, I think it's very difficult for the stock market to make a lot of headway. And therefore, I think we're going to be trending a little bit lower, holding above the 2011 low for now.
So there's tight liquidity in the market really holding back the equity markets?
Yes, absolutely. I mean, essentially, who's going to borrow any money to put it in the equity market when you're being faced with 25 to 30% annualized interest rates? And I think, therefore, until we see some relaxation, a lower rate structure, the equity market looks to be capped. Our equity market, strangely enough, shows a strong correlation with Egypt. And I've noticed that correlation come to the fore. It's coming to the fore again. And I think some buyers of the East African equity market are also buyers in Egypt. And when that market turns defensive, as it has done recently, it tapers foreign interest. So I'm keeping a close eye on the market. You have been mentioning foreign interest. In the quantum of things, our trading is very small. Therefore, foreign investor interest looks much bigger. But we've got to keep an eye on that, especially watch developments in Egypt.
Interesting correlation you're drawing there. Let's look at the insurance sector. Pan-Africa Insurance shedding some 6% on the day. Speculation that results are going to be hit by its investment in the equity front, given that some say that a third of premiums are invested in the stock market. As you say, 24% down. What is your take on Pan-Africa Insurance results?
Pan-Africa is a high beta, very correlated to the stock market counter. And essentially, as you already said, the stock market has been extremely weak. Their first half earnings slowed down considerably. They made less than a shilling at the first half stage. And I think they're going to struggle to make that ×2 for the full year. So I think it's going to be a little bit defensive. I think there's a bit more downside in the share. And if you look back over the last 5 years, it's high when the stock market is high, it's low when the stock market is low. The stock market is low this year.
Yeah. 40 insurers, over 40 insurers in Kenya, penetration at under 2% in the insurance sector. South Africa, we've got penetration sitting at around 14%. What's holding back the growth of insurance in the East African region?
Many reasons. First of all, there are way too many insurers. There has been a desire to go for the least premium. I think we get a big shake-up in the sector when we see one of these insurers fail, unable to pay a payout. And until that point comes, we're unfortunately going to have an actuarial relationship which at times is nonsensical. Essentially, what they're doing is taking in premium and hoping to make the money up via investments. Now, it's been very, very tough, clearly. The bond market is down, stock market is down. So until we have a bit of a shake-up, I think it will remain difficult for a number of these insurance companies. Obviously, big names, strong credits are going to come to the fore, but that moment is not upon us yet.
Yeah, and as really a case for consolidation in the sector. Let's move on to the breweries sector quickly. We're running out of time. East African Breweries bounced over 14% in less than a month. There's still a question mark over the capital it needs for to buy Kenya Breweries, that 20% stake. And then also SAB Miller at the same time setting up its distribution chain in the country. Why is East African Breweries experiencing this nice positive trend at this point?
I think, you know, the point you just made about the fact that there were some perceived question marks as to whether they'd come and call their shareholders for more cash. They're not going to call their shareholders for more cash. They're 11.2 billion shillings on the balance sheet at the full year mark. They're receiving quite a chunky amount of proceeds from the sale of their 20% stake in Tanzania Breweries, part of the unwinding of the SAB Miller relationship. That divorce, of course, is going to allow SAB Miller to come in and compete with them. And that the bridging gap is actually not that big. And as far as I'm aware from Seni, and he's coming to Mindspeak this Saturday, if anyone has a chance, he tells me that they've already narrowed that gap. They've got the funding in place. And I think the bounce, this 14% bounce, was from an oversold position and under a growing realization that EABL does not require any more funds from its shareholders.